All right. What is going on, future me? Hope all is well. Hope you're doing your thing as always. Is this thing on? Oh, yep, there we go. All right. So, as with every week, I want to go through my pre-market plan for this coming week. I did take one trade this week. Did break my winning streak with this one loss on GJ. I'm gonna go ahead and break it down. Definitely a couple of observations I've made for this coming week that definitely seem interesting to me at least. Have some news. I have a lot of news actually coming out. Monday, bank holiday. Tuesday, I believe. What is that? That's what is it? Flash PMI. Have a bunch of have like JPY, SPPI type of thing. Have a bunch of stuff on Wednesday as well. The FOMC meeting minutes. Thursday, prelim GDP and everything else. So there's also some stuff on Friday, but obviously not gonna rattle off every single news event. Do your own research on the fundamental side. But with that said, obviously have a ton of different news catalysts that can act as again, sort of drivers for volatility into this coming week. And just to kind of get straight into it, what we have here is the dollar, the Dixie, the daily chart for the dollar here pulled up. And as you can already see, right, huge rejection off of this previous bounce or break level around 104, 105 sort of area. Also in confluence with the 786 here, as we can see. So we did have the channel break, a small amount of upside momentum, and now it looks like we're getting the reversal after the retest after that, move into that level of structure around 105 type of thing. So with that, right, definitely some interesting setups coming up with gold, especially since we've hit like the 1830 sort of area that I mentioned last week, and I'll get into that as we go deeper into the plan. But if we can continue to see gold weakness and more confirmation of this knockback that we're seeing from 105 and lower, potentially into the range mid and the range low around 101 once again. Of course, that would look great for gold longs, which is what I'm looking for. And then even when we look at it on the weekly, though, it doesn't add a ton of context. Doesn't look super convincing. Sort of like a doji candle here. Still have a bit of pressure above 103 area. And as long as we're above 103 on the sort of higher time frames, I don't want to call for anything crazy just yet. But the rejection on the daily does look pretty good for at least a correction as far as the dollar is concerned. Monthly, still not a ton of context here either. As I mentioned in the previous pre-market plan, nothing crazy going on. I'm more going off of this rejection we're seeing here this last Friday, the most recent daily candle close, and the rejection that we saw thereafter. There was some USD news that came out last week. I actually wasn't looking at gold whatsoever, so I really didn't follow it too closely. With the amount of dollar news that we're seeing into this coming week and the way that the gold chart is setting up at the moment, definitely something that I'm going to want to pay a bit more attention to going into this coming week. Excuse me, and as I pull up the gold chart, that'll make a bit more sense. But moving into JPYBasket. The indexes have been going crazy, honestly. Let me be the first to say, because I mean, obviously we have that big rejection on the dollar, and now we look at JPYBasket, and big move into an out of an area of interest that I mentioned last week. Obviously, this big range we've been playing in between 8,000 and 8,450 sort of area. We're getting the break of that range low, right, with strength. Like I mean, looking at this daily candle list last Tuesday here. I mean, on Valentine's Day we had the huge wood to the upside solid body break. And of course, most likely, sort of plan of action or next move I'd expect in the coming days, weeks, everything else is obviously that move back into the zone at 8,000 we just broke out of, and then a move lower, especially with the way that it's looking. Again, just super straightforward range break. Would want to see where we find a floor when we look at lower range levels. Obviously, the first being this level at 77.65. And then so kind of a catalyst, right? I believe I mentioned in the previous pre-market plan, excuse me, is just that the Bank of Japan has appointed a new governor for the Bank of Japan, Ueda, and he was a big, a lot of people thought he was going to be dovish, or rather hawkish, excuse me, contrary to Kuroda's stance of being, negative interest rates and everything else. People thought that Ueda was going to come in, raise rates, and go from there, change the entire Bank of Japan's monetary policy and everything else. I believe I mentioned as well last week's pre-market plan that he basically affirmed Kuroda's stance in saying that he's going to stay dovish. He's going to keep rates where they're at. And so with that, the yen dumped, and that we're kind of seeing the after effects of that, moving into this week here as well, and obviously this past week with the break of the 8,000 level. We also on Friday have a press conference from Ueda. It's either the Thursday night or Friday sort of morning. It's a sensitive time. They don't want to. I guess they didn't put it out, type of thing. But with that said, definitely acting as a driver for the yen weakness that we're continuing to see, because as I've mentioned in the previous pre-market plans many times, the yen or the Bank of Japan enjoys or benefits they feel from a weak yen. So that's what we're seeing here. So again, wanting to see potential retest of the 8,000 level that we just broke out of and moves lower into 7765, excuse me. And lower than that potentially. So that's what I'll be looking for into this coming week. And it definitely adds a ton more context when we look at it on higher time frames as opposed to like DXY, for example. Super clean price action here, right? JPYBasket moving into the weekly range mid, moving into it with strength here as well. No wicks, pretty solid body outside of this very small sort of wick that we're seeing here as well. If we could continue to see weakness and pressure below this range mid, obviously that's going to call for GJ longs. I did get burned on that GJ short that I took, and we are playing around at that 162 level. We're right at the that previous level of resistance, and so anything can happen, right? Especially with the, again, yen weakness that we're seeing. We would only expect GJ longs to become valid at some point, right? It's only a matter of time if we continue to see this sort of yen weakness, and now we're starting to see a bit of GBP strength. Before I get into that, let's look at the monthly really quick. And as I mentioned on the weekly and daily, just looking extremely weak for the yen. Also respecting this trend line, this sort of descending channel and structure overall. And just, again, looking to see where we find the floor into these coming weeks, because I definitely feel that we're going to be seeing further weakness for the yen, potentially calling for GJ longs shortly if we continue to see this sort of price action. And so that leads me straight into GBP, right? And what we're seeing on the yen is the exact opposite of what we're seeing on GBP, right? GBP, right? Excuse me. Holy fuck. With that said, right? As I've mentioned 100 times, a million times, I always want to see these two indexes, these two charts, JPY and GBP, decoupled. So of course it's great that we're starting to see GBP starting to find a floor here and making potential move up into previous levels of structure, potentially around like 122 sort of area. And we're now seeing the opposite of that on JPYBasket, in that we're breaking a level of structure and potentially retesting it before we move lower. And so we're kind of at the mercy of the range as far as GBP is concerned. Obviously, the next move I'm looking for is that move into 122 and potentially higher than that. Would obviously love to see the range break, above this sort of local high around 124. But we're at the mercy of the chart. I don't have a crystal ball or anything of that sort. Overall, the main observation I do want to make is the decoupled nature of both GBP and JPY as it stands in their indexes and their charts and everything else. So that's definitely a positive sign as we move forward, so we don't have shitty price action, any choppiness or anything of that sort. As well as we're seeing GBP sort of find this floor and make a potential move up, no matter how big or small the move is, as we're starting to see JPY weakness, that could call for GJ loans, as I just mentioned here as well. And as I get into, GJ, obviously wanting to see loans above 162, no lower than that. And so with that said, that'll bring me straight into the weekly for GBP. And as we see, right, the daily looks good, but we're still kind of in a bad spot as far as the weekly and kind of higher time frames are concerned. We're still kind of trying to recover from this move back into the 618 and knockback. If we do see further downside, of course, 116, 117 sort of area is still in the card, so I don't want to call for anything super crazy just yet. But of course, the fact that JPY and GBP are decoupled at the moment is more than good enough for me. Still nothing definitive on the monthly as it stands. We're still kind of printing above that previous liquidity zone that we broke down from. As long as we're kind of finding stability above this level, and not getting extremely, the extreme rejection from this level around 121, 122 sort of area, still looking pretty solid for me. I mean, personally, If we start to engulf below this sort of level around, and below 119 to 120 sort of area, then it would be cause for concern for me. Outside of that, just letting the daily and weekly charts sort of develop as we continue to move forward in the month. So I hope that made sense. Again, main sort of point here is that both the GBP futures and JPY basket charts are looking the opposite of each other. They're decoupled, which is a good sign. Obviously, with that, as we see yen weakness and we see GBP strength, that would call for GJ longs. So of course, the yen goes down, GJ goes up, pound goes up, GJ goes up as well. If the pound goes down and the yen goes up, then GJ goes down. I hope that wasn't confusing. I hope that made sense. And so that leads me into GJ, right? And so this week, right? This week has been a little bit tricky. Honestly, not really tricky, but it's been one of those weeks where it's let me just get straight into it. Hopefully my explanation of the analysis and everything else will kind of piece this all together. So as I mentioned in previous pre-market plans, right, we have this sort of higher low structure starting to develop. And with that said, I did mention that I'm bearish below 162. I'm still bearish below 162, and I'm not, wanting to, again, get long until we get a break retest with strength above this level, this sort of range mid on the daily. But with that said, right, after this past week, unless I get definitive weakness, right, unless I get really good weakness on intraday levels around the 4 hour, 1 hour, still not wanting to get long and wanting to kind of sit on my hands to see what sort of reaction we get at 162 and see if we actually get the break and retest. Because as I've mentioned, right, again, we're forming a higher low sort of pattern. We had this, again, this previous, we had this high here. We now have this higher low. And now this coming week, we've printed a higher high. No matter how insignificant it looks, I mean, obviously we have the solid body where there were wicks looking left. That's significant enough to say that is a new higher high, right? Same way it was a higher high back here. So with that said, I mean, honestly, I'm just waiting to see how we, where the cards fall around 162 sort of area. We did get that knockback midweek last week, which looked good, and that's what made me get into the position that I ended up losing, and we'll get into that shortly. But so with that said, I mean, I'm gonna want to see how we react to 162 overall into this coming week. If we continue to get knocked back from 162, obviously I'm gonna want to short that level. But if we start to see weakness, or rather, if we start to find strength and stability above that level, I'm gonna obviously start switching my bias. Outside of that, as far as short targets are concerned, obviously 160 prime area, the sort of range mid within these range levels here as well, and then lower than that 158, 159 sort of area, self-explanatory. More so monitoring again how we play into that 162 level into the coming weeks, as we found strength toward the end of the week, as we can see here on the 4 hour, right? So as we can see overall, where is the weekly open? I believe it's right here. Yes, right here. So last week, coming off of the sales below the August 22 low, of course, perfect, in the perfect world, I was wanting to see August 22 low weakness. So as as the week opened up and we saw, price basically go up in a straight line, that was the opposite of my plan. I basically sat on my hands the entire week. And we did see this rejection at 162 initially, right? It wasn't convincing enough for me, and so I kind of missed. I mean, I guess you can kind of call it as me missing the trade, because I hesitated. I didn't want to get in at this particular point when I could have, right? I mean, this would have been a good move, I would say. Let's say 120 pip move, nothing super crazy. Still, that could have been a 1 to 3, especially with the pretty close invalidation above 162, sort of 50 area. Definitely could have worked. But with that said, I let price develop. I let price do its thing, and into this coming week, right? We're still sort of at the mercy of the range, right? As far as where I lie within the market, I'm still going to want to, again, stay short below 162. So if we start to see a rejection similar to the one that we saw back here, I would bite at that. This most recent 4 hour candle close is convincing to get, obviously to get short. Obviously with it being in confluence with the 618 here as well. Also with the, in confluence with this level of resistance, this level of structure around 160, 170, excuse me. It is a bit convincing for shorts. Once again, as far as where I'd want to get in, I would take, range high sells all day, every day, right? If we continue to see wicks in confluence with fib levels around this level, around this range high between, I would say, 160, 160, and 162 sort of area. I'm taking those sells all day, every day, unless there's like, engulfing candle sort of strength that we're seeing back here, right? I would want to wait for the rejection of those levels prior to getting in. And of course, this is still a bounce or break level for me. This is, if we get a break retest of this level around 162 sort of 25 area, that is a bullish reversal into 164, and I would take those buys into 164. As far as where else I would position myself within the market, I did take sells down here on 161, 160, 82 sort of area. Did not work out too well for me. I would want to see definitive weakness and retest below this level to really make it definitive for me and enough, generate enough conviction for me to want to get in. If I don't see that, then I probably wouldn't take it. I would say the higher probability setup would be at this range high around 160, 160 sort of area and 162. I would consider the 160, 80 sort of level sells, but they are risky. I'll say that, right? So I would consider them. They're risky, though. And then, of course, anything below the August 22 low, I'm taking all day, every day, no questions asked. If I get a break and recess below August 22 lows, I'm betting the entire house on it. It's just what it is, right? So, but we're at the current moment, as it stands, we are at the mercy of this sort of range. It's a pretty well-defined range here as well. I would say there's smaller ranges within the ranges here as well, around the 160-80 sort of area and then the 160-70 area, but the broader range being 162 and 159 sort of 50 overall, right? There's going to be big moves to the up and down side if either of those levels sort of break, because there's not much traffic around those levels. So I hope that made sense. Once again, just to kind of sum it on the 4-hour, would definitely take sells around the range high at 160, 170. And 162 sort of areas, breaks and retests of 159 at 50, August 22 low areas I'd take as well. Risky sells at 160, 80, I'd consider them, but they wouldn't be necessarily ideal. Like I wouldn't want to. I'd rather have the range high sells is what I would say. So I hope that made sense. Going into the 1 hour, 1 hour looks great right now for sells, right? Let me just move on with the analysis and I'll cover my trade. With that said, right? We do have something that we've seen many times developing here, right? We have this very fickle upward trending channel. Could be either an ascending triangle or a fickle channel that we're going to end up breaking to the downside. Obviously, this most recent candle close, this engulfing candle to the downside, does look convincing for sells. And that just kind of goes into what I was mentioning on the 4-hour, in that I would take rejections of this level. Obviously, I don't trade Sundays, so I'd have to wait for the structure to develop on Monday, Tuesday, later in the week, everything else. But if the opportunity was presented to me, I would take sales around 161.50 and 161.80 sort of area. This entire sort of level of structure here between, again, 161.50 and 161.80 would be valid to me. As high as 162 here as well. Obviously, if we see strength above this level, breaks, retest above this level, I would, obviously sit on my hands, look at the 4-hour, see how price, develops above the 162 level. If it doesn't reject, I'd take buys. If it does, I would then take sells. I hope that makes sense. But again, it's pretty straightforward for me, at least. It is a range that's developed. We are at the range high as it stands. If we continue to see rejections at this range high, I'd want to take sells, right? Just, it is what it is. And then on the other side of that, right, if we break this range or under 160.66, these are the risky sells I mentioned on the 4-hour. I would take breaks and retests below that structure just because there's not a ton of traffic looking left. And I would take that into 159.50 sort of area around the August 22 low. Obviously, would take sells below the August 22 low, breaks, retest below there as well. So I hope that made sense. And yeah, pretty straightforward. This is a very defined level of structure here. Pretty, straightforward level of resistance. Acted as support here in the past as well. And yeah, sells on weakness all day, every day. I hope that makes sense. Yeah, I'm just trying to make sure I'm covering everything. That was pretty straightforward, right? Like nothing. Fickle trend line, it could either squeeze, push higher, or break. I'm looking for the break. Obviously, wanting to get into sells. If it does break, I'm sitting on my hands to wait till we see stability above 162. And so with that leads me into the trade that I took last week. Did get faked out, right? Like this is I feel like this is one of those situations where like you do everything right, you execute perfectly, but the market just does with it what it wants. You know what I mean? I waited. I did not take sells back here anywhere back here. Although these would have looked, I was asleep for this second double top, like the second top for this double top here as well. How many times can I say top? But I was asleep for this move. Otherwise, I would have gotten in on something like this. But I was awake for this sort of first top forming. But the 4 hour and higher time frame candles just weren't doing it for me. They weren't convincing. So I was like, you know what? I'll wait for more confirmation. And I started to get that confirmation here, right when we were starting to break below the October 22 low. Looking at it on the 4 hour here as well, we had this big engulfing 4 hour candle. So I was like, all day we're going into the August 22 low. I guess a mistake of mine was that, not noticing or not considering the fact that we had made a new higher high. So this could be a new higher low as well. With that, obviously hindsight is 2020, but with that in mind, I probably wouldn't have taken it. But when we look at it in the 1 hour, right, in my mind, in the moment, looking at this, right, let me move this. I see the break. I see the engulfing candle. I mean, again, an improvement I could have made is waiting for a bigger engulfing candle, less wick here. But with that said, I did see the break with the engulfing candle below the October 22 low, and then the consecutive candles. Look at these wicks, these wick rejections to the upside in the October 22 low. I was like, wow, like this is literally the same sort of structure I saw back here. These engulfing candles and the wicks, and then back here as well, big wicks and everything else. So I was like, wow, like we're rejecting the October 22 low. We're not seeing any pressure back above it. And these are, 4 consecutive candles. So the next candle should be an engulfing to the downside. Exact opposite. So I got stopped out literally an hour within placing my position. Nothing super, I mean, it is what it is. Like, it's just one trade. I mean, I was honestly, I was looking forward to breaking my winning streak. So I'm not, euphoric or whatever the case is. So this one definitely humbled me once again. But overall, I feel like my execution was pretty good, especially after waiting for the confirmations. I didn't get in early. I didn't FOMO in or anything of that sort. I feel like I waited for the confirmations. I waited for the rejections and the wicks. It just, the market did what it wanted to do. What I could have done again to improve on this particular position is just waiting to see, because again, we did get this big rally into the week in a straight line, and it did end up printing a higher high, above this 160, 165 sort of area. So I should have considered that and waited to see a retest of the range high of the, of the range high of the range, the range high period, excuse me, instead of taking this range rate that could have counted as a higher low. That was a bit nuanced though, so I mean, it is what it is. And then, yeah, I mean, I think that was the biggest takeaway that I could have improved on overall. But I still feel like it was again, I think the trade idea was there. It just, the higher low consideration should have, I should have, I guess, I don't know. This is one of the things that's so tricky about analyzing your own trades, right? It's like, what could I have done differently? Because I'm trying to think about how I viewed it in the moment, right? Like, you see this engulfing candle on the 4 hour, but this is still, I mean, this is still like kind of a higher low. Yeah, it is what it is. It is what it is. I think, especially since I executed on the 1 hour, I mean, I think this looked good in the moment. I think this is a good execution. This is a good trade idea. But I should have considered the fact that we made a new high. I think that's the biggest takeaway. Had a new high. If we would have rejected down here, 160, 170, then that would have been valid. But anyways, that's my takeaway. That's kind of how I executed it, how I felt during the position after. I was only in it for like an hour type of thing, but I mean, on to the next one. Like, it is what it is. Like, what are you gonna do, right? Like, not gonna get hung up on this one. So moving on. Moving on to gold. Just kind of let's look at the weekly first, just because there's not a ton of context on the weekly, but we did make that move into the 1805s, the 1830 sort of area, the sort of range mid, and we did end up creating a wick into that level. So we are trying to sort of build a base, and that definitely makes a bit more sense when we look on the daily chart here. Most recent daily candle close, huge wick into that 1810 sort of area, that 1820 sort of area here as well. And for me, potentially spells a bounce back into, I would say, the 1870s potentially. Even if it's to get rejected from the 1870s, I do feel like that will be a retracement that we'll see into these coming weeks. And so with that, I do want to start setting up long, especially after seeing the daily chart on the dollar that I just covered a few moments ago. Excuse me, having that big rejection off of that bouncer break level around 105, and now starting to see that weakness. And of course, when we see dollar weakness, that just ends up being good for gold as far as longs are concerned. So looking at it on the 4 hour, it definitely adds a bit more context. We do have this channel sort of developing here. Well-defined range between 1830 and 1865, as we can see here, and a very well-defined fib from the kind of swing high to the swing low. We do have a local fib here as well, around this level of structure around 1850 that we can consider here as well. I do like the bigger sort of picture with the range high, or rather the swing high and swing low, just because it is in confluence, this 618 here with 1865, that previous level of structure, also the range high overall. And so with that, right, when we see bounces like this and channel breaks like this, I'm wanting to play it level to level, right? So that would mean I would want to get in on a retest of 1829, taking that into 1865 all day, every day. If we start to see wicks a little bit below it, like 1826, 1820, 1828 sort of area, I would take that there as well. But of course, I would want to see stability and strength above 1829 period to see myself getting long. Of course, candles like this, candles, rejections like this of 1829 and higher would look good for me. Outside of that, I wouldn't sort of play the middle of this range. I would wait for the 1805 retest to see where the cards fall and everything else. So I hope that makes sense from a 4 hour perspective. Just to kind of go back here as well, just because I know I've been mentioning that I'm bullish on gold above 1756. That has worked to my benefit. Obviously when gold was trending, I would say now I have seen clear gold sells, right? Like this last week, I can't ignore the fact that I could have capitalized on gold sells. I think that's something that I have to work on in the future as well. Just having fluidity in my bias and knowing the setup is a good one when I see it, right? Like I could have killed this range low break, but I'm bullish above 1756, and that's what I'm sticking to, right? Like I'm not gonna short in a macro bull trend, and then I kind of have to again have that fluidity on an intraday sort of perspective to be able to take these kind of moves. But it is what it is. I'm still bullish above 1756. I'm still going to be taking loans on retest of 1829 here, and that's exactly what I'm going to be spelling out overall until we do see that break of 1756, if we do. So moving on to the 1 hour, definitely becomes a bit more clear as we go into lower time frames. As we can see right here, right, again, at the mercy of the range, right? We have the previous weekly open here. Super well-defined range. We have the range low at 1825 sort of area where I would be taking buys on stability. We have the sort of the range mid between that at 1833, and then the range high at 1844. We are playing around at that range high here as well, so forming sort of a rounded top. So I would want to see a retest of either 1833 or 1825 before getting in. But if we do, for whatever reason, start to see stability and breaks and retests above 1844, I would take that all day, every day into 1865. And same thing again. I would take breaks, retests of 1825. The risky buys would be at 1833. I would consider them, but they would be risky. And then the higher probability break retest of the range high at 1845 or something I would consider as well. And then even outside of that, if we do see continued strength, I would take the buys and retests above 1865, obviously with well-defined strength, because as we can see, it is a pretty well-respected level of structure. So I hope that made sense. I feel like it's pretty straightforward week after week. I'm playing it level to level as with every week. Again, 1825 valid, 1833 is risky buys, but I would consider breaks retest of 1844 all day, every day. 1865 breaks retest all day, every day. As far as GJ is concerned, I would take weakness, sells on weakness of 161, 50, 60 sort of area. Above 162, I'd sit on my hands, wait to see how price stabilizes. Obviously, we'll take the August 22 low, breaks retest down here at 159.50, and then the risky sells at 160.66. They are valid on breaks retest. So I hope that makes sense. That's my pre-market plan, and I'm sticking to it. Future me, God bless you, bro. Love you. Hope you're living to your utmost potential, doing your thing. Yeah, and God bless. Take care. God bless everybody watching. You already know. And yeah, take care.